All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla has been very volatile, as we could see, and it actually had a recovery, rose up to about 448, dipped, and it's been in a sideways direction. But right now, the bulls reappeared and broke through the 50-day moving average. That's a good sign. Could they keep this momentum to hit newer highs and newer levels of resistance? So let's go ahead and look at what our new resistance is and what our new support levels are. Let's go ahead and move this over. The highest point of the day here in the last couple of hours. And here we are with our support slightly above the 50-day moving average. This is an important support as well. I mean, if the 50-day moving average was to get broken through, so if you want to write that down, 413.96 to keep in mind if the volatility does need, this type of reference. But I don't think the volatility would be that quick. I mean, that would be also a lot of momentum by the bulls lost fairly quickly, and this was just a quick jump and then falling that fast. I mean, profit taking to the max, and there's no real bullish run here. So pay close attention to that as well. But the 50-day moving average is 421.37. I can't land right on it, but 421.37 is super important because of the fact that if that gets crossed by the bulls, then they lost control. And the bears have brought it down and brought this down to newer lows. So if the bulls allow that to be crossed by them and the bears just continue to tear this down, then the bulls lost control, and this is actually going into bearish territory. So the bulls can't allow that to happen. Now, if the bulls maintain themselves above it, we're in bullish territory, and the best way for the bulls to stay in bullish territory and work their way up to newer highs and further away from the 50-day moving average in an upward direction is to break through 430.18, turn that into a support, and start to work their way up to newer highs and newer resistance levels. That's the goal for the bulls. The bulls need to focus on that, and they really need to break through this. I want to emphasize that because that's what's going to allow them to continue this momentum that has been created to hit newer highs and stay in bullish territory, breaking through 430.18, turn that into a support so they can work their way up to new highs and newer resistance levels. On the other end of things, we have what the bears want. If the bears accomplish this, they're not just yet in control, but the bulls are starting to lose leverage. And like I said earlier, if the bulls allow it to break through the 50-day moving average and it gets broken through by them not coming back up and bringing this back up, then the bears are starting to gain control. But before getting there, the bears need to break through the first support level, and our support level here is 424.29. That is the support level that the bears need to break through. If they accomplish that, I'd pay very close attention to how this stock is reacting between 421.29 and how it's reacting here at the 50-day moving average in between that area. So 424.29, how quickly is it moving to newer lows? How quickly is it getting closer to the 50-day moving average? And are the bulls trying to reappear to leave this in bullish territory, or are the bears tearing this one down to hit newer lows and newer support levels? So keep that in mind. I would emphasize that. Pay very close attention to how this stock is behaving if 424.29 does get crossed. And again, bulls need to break through 430.18 to continue to work their way up to newer highs and newer resistance levels. And as long as we stay above it, we're in bullish territory. And if we go below the 50-day moving average, we are ending up in bearish territory again. We just got out of it, and the bulls need to continue this momentum by breaking through resistance. Thank you guys so much for watching. If you feel inclined or encouraged to subscribe, please do so, but don't forget to click on the bell by turning on all notifications so that you don't miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. and these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.